Let me introduce our next speaker. Avichal, come on out. He's sort of one of the larger, come on in.
Thanks.
Yeah.
Thank you,
Runs one of the larger crypto funds, but is going to talk to us about trust, which is a real issue on the internet. So,
I'll do this one too.
oh.
Thank you. All right, everybody, let's see if this moves forward. Does this switch? Boom. Hey, everybody. How you doing? Good. All right. Thank you for being here. Thank you, Vinod. Thank you, KV team, for having me. My general counsel requires me to put this up. You should not listen to anything I say ever about anything. That's the summary. Okay, just a little bit about me as a quick intro. I spent most of my career as an entrepreneur, started and sold 2 companies, became an angel investor, was fortunate to be involved with a number of companies that are worth, in aggregate, something like $100 billion now, across all sorts of sectors. SaaS and productivity and self-driving cars and supersonic airplanes and all sorts of fun stuff. And these days I run Electric Capital, which is one of the larger crypto VC firms in the world. And we manage somewhere between $0 and $2 billion. It's closer to 0 if you ask Warren Buffett. So what I'm going to talk about is crypto, but through a slightly different lens. My hope is to give you a little bit of a different perspective on why these cryptographic and distributed systems technologies are important, and in my opinion, they're even extremely necessary for where we are as a society. And I think, generally when I give these kinds of talks, there's a pretty big dispersion in terms of how people feel about crypto. So maybe actually, I have a lot of slides in here, and I can emphasize different things. Raise your hand if you own any Bitcoin. Okay. Raise your hand if you own any ETH. Okay, raise your hand if you own an NFT. Boom, now we're talking, all right. Raise your hand if you think crypto is mostly scams and a waste of time. Yes, okay, the more people, the better. The more adversarial, the better this is. Okay, this is gonna be fun. Okay, so I'll talk about story in 3 parts, basically. Where we were, where we are, and where we're going. So just to set some context here, I'm gonna pick on Warren Buffett because he keeps saying that what I do is worthless. So, there's sort of this claim that gets made, generally speaking, about how the world's better than ever. And, if you look at really long-term time horizons, like from the 1900s, this is generally true for a lot of good reasons. But usually when people make these kinds of arguments, they are making them about global aggregates, and they're making them kind of on this 120-year kind of time horizon. And I'm going to make some statements which are in direct conflict with this statement. I'm going to make statements about populations of people and distributions of outcomes, not average global outcomes. And I think systems have had really, really different outcomes for different kinds of people over the last 40 years in particular, relative to the last 150 years. So let me just walk you through some data of why I think things are not so rosy when we look at the last 40 years. Wealth inequality, I think this is not a surprise to anybody at this point. It's sort of getting worse and worse. Productivity has plateaued in a lot of Western economies, so it also surprises some people, actually, if you go back and you look at kind of roughly what happened in 2007. I actually saw a great tweet the other day. I don't know if anybody's seen the what happened in 1971 meme that flows around the internet every now and then. I think the current generation of high school students, like Gen Zers, will probably in 15 years look at all sorts of graphs that say, what the hell happened in 2007, 2008, because a bunch of stuff kind of broke. Young people don't have resources to move out, so more people in their 20s are living with their parents than are not. Life expectancy is going down in the US, which is terrible and unfortunate, and this is more acute depending on which populations of people you look at. We basically shut down all the hospitals and just started putting people in prison, which is really sad and unfortunate, and anybody who lives in the Bay Area kind of understands the consequences of this. Birth rates have plummeted. Which is a great sign that something is going on. Like, we are literally, as biological entities, there's like one reason we exist, which is to procreate, and people have stopped doing that. Mass shootings are at an all-time high. It's a terrible graph. It's just sad. Suicide rates are at 50-year highs when you look at teenagers in particular. And so I look at a lot of this, and this is, by the way, on both sides of the Atlantic. And so I think Buffett's right if you look at 100 years globally and if you look at the averages. But when you kind of look behind the scenes a little bit, I think there's a lot of stuff that's broken, especially over the last 30 years. A bunch of stuff broke. And so, if you think about it, there's a lot of data here, but I think people kind of intuitively know what's going on too. So I'm going to show you a bunch of data about trust in society. And how this is sort of at the average person sort of manifesting. By the way, this is mostly data, if you look at it, if you're noticing really closely, from 2016. This is data I put together before we started our firm, which was kind of the basis for our investment thesis about what's happening. And I haven't had to update it because it's basically been correct. 20% of Americans trust the government. 32% of Americans trust the media. By the way, you'll notice a lot of this data goes back to the 70s. So this is not like something happened in the last 5 years. This is not like a post-COVID or a post-2008 thing. 29% of Americans trust public schools. 27% of Americans trust banks. Obviously a big fall off after 2008. And if you break this down by demographics, unsurprisingly, it's people who have been left behind that feel this the most acutely. And what's stark about this is really recent Pew data. I think this is from a couple months ago. What's crazy about this is that the youngest people are the least trusting right now, which is exactly the opposite of what you would hope and expect, right? These are not people who have gone into society and had a factory job for 25 years and gotten the crap beaten out of them. These are people who are supposed to be bright-eyed and bushy-tailed, and they're the ones who are the least trusting of existing systems. And this is a global problem, particularly acute in Western democracies. So if you're in Asia, you've had an amazing 25 or 30-year run. If you go to India, if you go to China, if you're on the ground, you sort of sense that. If you look in all the Western democracies, most people think that the system is broken. Which is a pretty stark statement for people to make, that the system is broken. They're in effect saying, my kids are going to have a worse life than I will, and I'm worried about that. And I think it's basically because we created a lot of the core institutions in society, like public schools, the press, the judiciary. A lot of these sort of institutions were created post-World War II, and that was a very different world. And a lot of those institutions have now broken. A lot of those systems have broken, and we kind of realize that now. They've actually been broken for 20 years, 30 years, but it's only now that they've gotten so broken that we're starting to realize how broken they really are. And that's sort of permeated into society and has had this really significant impact, which is basically people have lost trust in these institutions, pretty starkly. And I think this is a pretty big and important cultural shift. I think this changes a lot of things downstream. And I think if you understand this and you sort of assume that the trust assumptions that users have and that society has is fundamentally different, I think that opens up a whole set of questions and a whole set of opportunities, actually. Despite all of this, by the way, I'm in the Vinod camp. I'm actually a huge optimist, so we'll walk through why. So there's this really important question, I think, that comes out of this, which is, how do we perform the basic functions of a society in a low-trust environment? If people don't trust each other, if they don't trust the government, if they don't trust these systems, if they don't trust the institutions, how do we actually get anything done? And this is actually exactly the question that the author of the Bitcoin white paper asked in 2008. It was a thought experiment, right? It's like, how would you actually do payments if you don't trust the banks anymore, because the banks kind of screwed you and the whole system fell apart? What if I actually want to do some basic transactions in a peer-to-peer way? How do I do that digitally? And Bitcoin was sort of a first attempt at that. And actually, downstream of that, for in the last decade, a bunch of computer scientists sat down and created a bunch of really interesting technologies. So if you set aside kind of the meme coins and all the hype cycle for a second, and you start looking at the technology, as is often the case if anybody's read economists like Carlota Perez, a lot of times hype cycles actually create really, really important technological breakthroughs. And there's a whole host of these here, right? So quote unquote blockchains, which are often not strictly speaking blockchains, they might be directed acyclical graphs or other data structures, are these open API databases that anybody can read from. And sometimes write to, subject to certain rules. And the downstream effect is they prevent vendor lock-in. Like if you don't trust your vendor, you may actually prefer something like this. Distributed consensus is a way for a bunch of people who don't actually trust each other to agree on the state of the world. And there have been massive breakthroughs in distributed consensus over the last several years. Tokens are just cryptographic signatures that try to align incentives between mutually distrusting parties in a global system. Non-fungible tokens are essentially a property right that you and I can agree to. That represents some asset, and you and I agree who owns that asset. Zero-knowledge proofs, which come out of a lot of the same cryptography, they've been mathematical concepts since the 80s. It's really in the last 5 or 6 years that the amount of innovation has just gone exponential, because there's now a profit motive to applying this stuff. Because in a global open system, you kind of don't want everybody to know how much money you make every month. Or if you're a business, you don't want people to know who your counterparties are. And so the ability to do privacy-preserving transactions at scale ends up being a really important primitive to have. And so all of this is actually now production ready, and has been invested in for the last several years because of the profit motive that's been created. And so it turns out you have this amazing collision of two things happening. You have this massive collapse of trust in society, and you have this amazing technology stack that's been created that assumes that there isn't any trust, that you can't trust your counterparty, that you can't trust third parties, that you can't trust an intermediary. And to me, that's a perfect storm, right? What crypto actually is a cultural shift manifesting through technology. And I think this fundamental trust assumption, it's really subtle, but it has ramifications all the way down the tech stack. Because if you don't trust your counterparties and you don't trust intermediaries, you just have to build software differently, which brings us to where we are today. So, I think as a starting point, for maybe the BTC doubters in the room, I would much rather have Bitcoin than Argentinian pesos, for example. Argentinian pesos since the 2018 peak of Bitcoin, which is 20K, is down about 91%, and Bitcoin's up about 40%. So too often, I think, especially people in the developed world, in the US, have this US dollar-centric perspective. And actually, most of the world does not have the privilege of having the US dollar domestically. There's a great, if anybody knows David Foster Wallace, who's a great American writer, who, like many great artists, killed himself. But he gave a great speech at Kenyon College in the early 2000s. It tells this really simple parable. There's an older fish swimming by two younger fish. And as the older fish swims by the way, I'm going to butcher this. You should go listen to him tell it. He says, the older fish says, "Hey, boys, how's the water today?" And the two young fish kind of nod at the older fish. And then they kind of keep swimming downstream for a little bit. And then one younger fish turns to the other younger fish and says, "Hey, what's water?" Right, which is supposed to be a parable about being able to see the water and challenging assumptions. And I think the US dollar is water, which is why most people in the US don't actually understand this stuff. And so there's actually this really important culture shift that's happening, rooted in this sort of trustless technology, which is that a social consensus has emerged that these cryptographically secured, decentralized ones and zeros are valuable. They're valuable to hundreds of millions of people now. And that's not just a made-up number. Coinbase literally has 100 million accounts, and they're actually, not the majority of the market actually these days. And it's tough to get your head around. I'm going to leave this up for a second, but it turns out it's pretty rational, in my opinion. Actually, if you look at the characteristics of a good store of value, like a gold, relative to most fiat currencies, you can't just say potatoes are going to be a store of value. Like, they have certain characteristics, right? They need to be difficult to seize. They need to be relatively private, easy to transport, easy to subdivide, easy to acquire, easy to transfer to other people, and so on and so on. And actually, once you start stacking something like a Bitcoin or ETH next to some of these other possibilities, it actually kind of makes sense, rationally speaking. There's also a really great history, if anybody's ever curious, around why humans kind of converged on gold. It's also very rational, right? It doesn't tarnish. It's easy to extract from the earth. There's even, if you start digging into it, it's like, well, why did humans in parts of the world like India settle on gold jewelry, not just sort of gold bricks? It's because even that makes it more seizure resistant, right? Because if you hand jewelry to your daughter, you're able to transfer wealth in a patriarchal society. And if somebody takes that jewelry and sells it in the local village to the jeweler, they know exactly where that jewelry came from, and it's a great dishonor, right? So you can actually bake seizure resistance into the technology. So actually, a lot of these things, when you look at them, humans aren't, on a long time horizon, are actually pretty rational about these things. And so this actually makes a lot of sense, in my opinion. And back to this idea of demographic collapse, of trust, if you start slicing this by age, it's very clear that young people prefer this and have, I'm not going to read all of these, half of millennials and Gen Z want crypto in their 401ks. They think it's not going away. The majority of universities now offer crypto courses, this number's actually old, this number's gone up at all the top technical universities. If you go to a developer conference, especially internationally outside the US, this is what the room looks like. And so if you sort of grant for a second that at this base layer, you might have ones and zeros that a couple 100 million people in the world has said, I want those ones and zeros, which is kind of a crazy thought if you think about it, right? Like, if an alien came down and said, wow, these people are trading, assets that might buy them food and water and are buying some ones and zeros, that's kind of a weird behavior. But now 100 million people are doing it, over 100 million people. If you grant that for a second, what you realize is that what's really interesting about this, actually, is that you can write code around this. Right? So as soon as value transmission and value accrual becomes ones and zeros, you can write code around that. And so you can actually create synthetic dollars. And if you can do that, you can actually write rules in code that say, here's who has access to that money. Here's who has access to, here's what I need you to do with that cash flow over some period of time. And that actually allows you to recreate the entire financial stack. You can actually recreate everything that currently exists in the financial ecosystem, which then unlocks things like paying for competition, it unlocks marketplaces, it unlocks games, because all of these fundamentally are about money moving around. And now you have an entirely new financial stack to be able to do that. And this is not actually theoretical, right? I think this is useful today. So let me walk you through an example. Has anybody here actually used Aave or Uniswap, couple people. Okay, I'll walk you through very simplified versions of these. And so for the crypto folks in the audience, these are gross simplifications, so don't hold it against me. Here's a really simple example. There are now smart contracts that exist on chain. You can put in $1,000. You get a token back as a lender that entitles you to your share of that $1,000 sitting in that pool plus some interest. A borrower can come along and borrow that $1,000 and put down 2 ETH. 2 ETH is worth a lot more than $1,000, and they'll pay some interest. Why might they do this? Well, suppose you have a lot of ETH and you don't want to sell it, but you do need to pay some bills. It's a very simple way for you to turn your ETH into dollars without selling it and maintaining exposure to your ETH. For example, I have a lot of ETH. I actually can't go anywhere to do anything with it. Like I can't go to Goldman Sachs and say, hey, will you take some ETH and give me a loan against it? They actually can't. They don't know how to do that. But I can go to a smart contract and do that. And the smart contract will charge fees. It'll charge an interest rate. So let's say it charges 5% interest. And what that smart contract can do is send most of those fees, that revenue stream, back to the people who put in the money, the lenders, and keep some of it for itself, for future operations. This to me looks basically like what a simplified bank does. So, right, basically lending and sending the money back to you via savings account, yada, yada. This actually is a simplified bank. It's just happening entirely in code. And right now, literally I checked yesterday, there's about $5 billion sitting in Aave, there's $1.26 billion sitting in Compound. So these are not small numbers. These are not, JP Morgan numbers yet. But this is definitely more than a proof of concept. Worth noting too, when all of crypto was falling apart, the FTX fiasco was happening, BlockFi is happening, Celsius is happening, these systems kept working. Like nothing broke. Right? And actually, these systems, I don't know if anybody read the details, but the hedge fund that Sam Bankman-Fried was running in addition to FTX, that hedge fund was borrowing money and doing all sorts of highly risky strategies. They went into some of these decentralized systems and borrowed money. As the whole system was kind of falling apart, as Alameda was falling apart, they called a bunch of people. They called BlockFi, they called Celsius and said, hey, we'll give you more collateral, we're good for it, it's a temporary blip in the collateral value, trust us. They basically recreated the entire mistake of 2008, right? A bunch of people accepted collateral that wasn't worth what it was worth and was highly illiquid and they weren't able to sell it. There's no way to negotiate with the smart contract. So they had to pay back the smart contract loans immediately, otherwise they're going to get margin called. So it turned out the smart contracts were the senior secured debt in that situation, and everybody here was made whole without having to go through bankruptcy court, which is pretty remarkable, actually. Here's another example, a little bit more involved. In this case, there's actually no human counterparty. It's actually the smart contract is the counterparty to this, because the smart contract, because now the ones and zeros are money, the smart contract can actually custody those assets in the contract. So you can actually hand your money to a smart contract and say, I'll give you 1 ETH and $1,000. And you give me a token that says I have the rights to that share of the pool of money that's sitting in you inside the contract. And so let's say there's 10 ETH and $10,000. Assume ETH is worth $1,000 sitting in this contract. Somebody else can come along later and transact with that contract and say, I'll give you 1 ETH. You give me $1,000. I'll sell an ETH to you, right? And now you have actually more ETH sitting in the contract and less money. And if you sort of do the math here, you're like, wait, the price of ETH just went down below $1,000, right? And let's say ETH is at 900. So there's actually an arbitrage opportunity here. So now somebody else can come along and say, I will give you 1 ETH. I'll essentially sell you an ETH for this much money. Sorry, I'll put in some money and I'll buy an ETH from you. I'll buy ETH from you for $800 approximately, even though it's worth 900. Simple trade. I just made some money. Now the price just went back up. And so you can see this is sort of like a numerical approximation. And it'll sort of converge on the price really quickly because you've incentivized the arbitrageurs to come in. What's fascinating about this is that there's no human involved, right? Humans put in some money, and then the smart contract is sort of doing all the work and is the counterparty of the transaction. Also noteworthy, that smart contract doesn't exist in a jurisdiction. It's not like that lives in the United States, right? It's not a Delaware C Corp. It's just a piece of open source code that lives kind of simultaneously in 50 jurisdictions all at the same time, which creates a lot of downstream challenges, actually. And this is real. So Uniswap does about the same amount of volume as Coinbase on any given day. Which is a multi-thousand person publicly traded company, is doing the same transaction volume. It's pretty remarkable. If you look at the aggregate of all these kinds of DeFi tools that are sitting on chain right now, it's about $50 billion sitting in these today, even despite the sort of crash in prices. If you were to consider that bank, right, these are a bunch of financial services, it would actually be the 50th largest bank in the United States, which is pretty remarkable. If you count all the stable coins, all the USD that's in circulation on these, some of it's synthetic, some of it's backed by real US, quote unquote, real US dollar sitting in a bank, it would actually be the 20th largest bank in the United States today. There's now 23,000 monthly active developers writing code in crypto, which is pretty remarkable. This is just open source code. And they've shipped pretty amazing infrastructure. ETH moved to proof of stake, layer 2s for scaling. There are multiple layer 1s outside of Ethereum that are actually useful now. You can move money trustlessly between all of those things now. There's institutional custody tools. These are way better than a bank. We use these to manage our assets. When SVB was falling apart, it didn't impact us. Actually, we own all of our own money and all of our own assets. And the tooling that we can build around this is way better. It's basically APIs. You imagine how hard it is to actually write code against your money sitting in SVB. You can't. It's kind of a pain in the ass. We've tried. You can do this for yourself. There's mobile wallets now sitting in the App Store where you can custody your own assets, and you can actually have multi-sig protection. We're talking about zero-knowledge proofs. These things are performant now. They're actually ways to give yourself very significant privacy. And now this is starting to spill over into all sorts of other interesting applications beyond financial. So I'll give you two examples. One is a company called HealthX. They basically have made it so that pharma companies that have drug trials can find patients much more easily. It turns out all of this stuff is sitting in health, as some people here know, given the portfolio of Khosla. These health systems have all of this data sitting in siloed data systems. This is a really simple way to essentially route a bunch of transactions around, route API calls around, make that matching happen. But each of the health systems actually has a share in the upside of the network being successful. It's basically a distributed system with a bunch of smart contracts and distributed consensus. Kurta is a tool where security researchers can solve puzzles. So one side of the market creates puzzles. The other side of the market solves those puzzles, and then cryptographically proves that they solved the puzzle. And so if you're a security researcher, this is actually a great way to prove that you know how to find bugs in code. And if you do that, you get an NFT that proves that you know how to solve that code. So now your wallet becomes your attestation of how good are you as a researcher, because the harder the puzzles are that you've solved, the better a researcher you are. This is way better than LinkedIn. Right, on LinkedIn, somebody claims I went to school somewhere and I can do a certain thing, and they write some words. This is a cryptographic proof that you actually know how to write code, and that you actually know how to find bugs in really complex software. And it doesn't matter where you went to school. You can be anywhere in the world. And so this turns into actually the best network to hire essentially white hat hackers and security researchers in the world. And so, I think if you go back to the 2018 ICO bubble, we saw all of these ideas. They're just too early. And I think, echoing what Vinod said, I think we're about 5 years into this transition now. And so we're actually roughly on track for what we'd expect. I'm going to go quick here because we only have a couple minutes. So, the sort of takeaway here is, I think with the decentralized money stack that's emerged, we actually can reimagine a lot of these institutions that have sort of atrophied and decayed and that people no longer trust. And I want to move quickly here. So I'm going to burn through this. There are two ways that this stuff goes mainstream. Either, it's these products can build mainstream use cases, like people want dollars in the world. Turns out this is actually the best way to get dollars to everybody in the world. Or it's going to allow people to do new things that just weren't possible before. For example, people weren't worried about a debt ceiling issue or SVB collapsing. And all of a sudden, this is actually great infrastructure to prevent you from having to deal with the consequences of those. Sort of piggybacking on what Vinod was just saying, why is it so hard for people to believe that this stuff is going to work so quickly? It's basically because all of us in this room have some very key human biases. We don't understand low probability events. We don't understand large numbers. We don't understand intuitively exponential growth, as anybody who's been through COVID understands. And we don't understand these really complex systems that need to intersect with each other. And if you think about startups, all of our business, that's basically the intersection of all four of these things, right? It's like low probability events with really large numbers and exponential growth, intersected combinatorially across a bunch of different domains. And so I would posit that crypto and decentralized tech are going to grow much, much faster than people expect, and the results are going to be way weirder than people expect. And so let me just walk you through an example, because we have to think combinatorially in addition to exponentially here. Let's talk about something like AI plus crypto. It's the hot topic of the week, right? AI. And so, we already have these decentralized payment networks that are used by people all over the world. And a lot of these people, most of these people live outside the US because they don't want to be a part of the US banking system. Pretty soon, I think these people are going to start using applications that are created entirely by AI bots. And those AI bots are going to partner with other AI code to audit their code. And then those AI bots are going to have to pay each other somehow. And because none of these AI have a physical form, they can't walk into a bank and do KYC, they're going to have to use decentralized money. They're going to have to use decentralized cryptographic money. It's a natural API for these folks to be able to communicate with each other. And we already have version 1 of this with the smart contracts that talk to each other. This gets even weirder when you start thinking about AI being able to pay humans, because this is actually, in my opinion, the natural interface for AI and humans to interact with each other. So I don't worry about robots walking around and that's an AI. I actually think it's way easier for AI to just pay humans in the real world to walk around and do stuff. I can just pay a TaskRabbit to go do something. Because you have 10 million years of evolution in the human hand that makes that way easier than us trying to recreate that. So I'll just pay you $50 to go do something. That's all going to be cryptographic money because that's the natural interface for this AI. And then if you start putting yourself in the shoes of a small country, you start thinking about this as an opportunity. Because you say, this is not a Delaware C Corp. This is not an LLC. Like, what the hell is that thing? It doesn't exist in jurisdiction. So maybe we should give some of these AI some sort of personhood, the way that we have corporations. Because once you do that, you make it easier for AI to pay your citizens and invest in your country. Maybe you can tax some of that, or maybe that's a competitive advantage. Right, whether or not we should tax AI is sort of an open question here. And probably Forbes will create some lists that are like, here are the richest AIs in the world, because Forbes loves to create lists. And so people are already pushing back on this idea. They're worried about the consequences of AI, but it turns out a lot of the problems that AI creates, like deep fakes, cryptography and distributed systems solve. Because if you had a cryptographic signature that said, my phone actually created this thing and has not been changed downstream, it's verifiable that actually the deep fake was not created. It's not a deep fake, right? It turns out all of this cryptography and distributed system actually solve exactly the problems that AI creates. Or if you have sort of this challenge of, well, I don't want the AI to use my data. I want to be compensated for it. How exactly is that going to happen? It actually makes sense for that to be a cryptographic distributed system where you can just have money show up in your wallet anytime your data is used after you give permission to your data to being used. Again, not theoretical. There's actually a company right now that has a pilot with the DMV in California to do cryptographic driver's licenses on your phone. So you can actually authorize certain transactions and prove that it's you. So anyway, the point I'm trying to make here is that once you start thinking combinatorially, it's really obvious that AI and crypto converge. Because AI needs that infrastructure. It needs the ability to transact with other AI. It needs the ability to transact with other humans. And actually, cryptography is a solution to a bunch of the problems that AI creates. And this is just one of the intersections that we have to start thinking about, right? Once these things sort of all intersect with each other, it gets really, really wild and crazy. And it's going to happen way, way faster than anybody expects. So I'm out of time, so I'm going to go fast. My point here, note I didn't talk about meme coins or the price of anything, because to me the really interesting thing here is the technology and how it's coming together with this really fundamental human challenge that we've created, which is the institutions and systems that we created as a society, as a Western society, have all basically broken. And people have lost trust in those institutions. But these technologies were designed to solve exactly those problems. They're designed to operate in a trustless environment, and so we can actually reimagine all of these systems and institutions with these fundamentally different trust assumptions. And these systems can be open source, they can be accessible 24/7, they can aggregate capital in values aligned ways. Vinod touched on this too. I think these systems are fundamentally democratic. That's what's so interesting about them, right? They have notions of privacy or due process built in. And I think that's a really powerful and important thing for where the world is headed. So we can actually build better ways to identify talent. We can build better ways to figure out what's true and what's not true because we have cryptographic signatures. We can build better health systems because you can actually own your data and give people access to that data. We can fund basic research in way better ways because this is actually a fantastic way to do crowdfunding. As an example, there's about $100 million that was sent to Ukraine when the system fell apart after the war in Russia, because this turns out to be the fastest and best way to get money moving internationally. And we can actually build a better financial system. And so to me, what this starts to look like is a new country with open source institutions and AI citizens that we all get to participate in and build from scratch, which is a pretty wild and crazy idea, because I think that really only happens about once a century, that you open up a new frontier and get to actually redefine what these institutions fundamentally are. Okay. I talked fast. We covered a lot of ground. I don't even know if we have time for questions. No time for questions. Thank you, everybody. If you want to talk crypto, come find me later.
Thank you, Avichal.